Testing, 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 testing. Okay, now it stays. Weird, it does that from, what, once a month? Did it just do that? Yeah. Well, I read you the disclaimer, so don't risk money you cannot afford to lose because Forex is risky. Did you read the charts, I guess? There you go. So anyways, what I was talking about is Chinese GDP. IMF raised their forecast for GDP in China, but lowered their forecast for the rest of the world, which is a little strange, I think, because I think China relies on the rest of the world, right? But the IMF does something interesting. They don't just look at backward data. Their methodology is actually quite unique. I don't know if you know about that as in regards to the IMF. So what they also do is they gather forward-looking not statistics, but surveys, if you will, and they put it all together in a hybrid fuzzy logic, complete different methodology for IMF data. And so they see something that maybe other people don't see. Maybe that's a good thing, or maybe they foresee a stimulus coming or something. So, so anyways, they cut global GDP but raised Chinese GDP. Kind of interesting. And then China, the Chinese top forecasting government agency sees their CPI around 2%, but they really want 3%. Okay, and notice their GDP, they're looking at something closer to 7%, really is what they want. Okay, so interesting nonetheless. Europe, German PPI, not amazing. Notice the number though, negative 2.2. Negative 2.2, and that's better than expected. Yeah. Yeah. Good job, Germany. Yeah, better than expected. Negative 2.2%. How about our friends in South Africa? Whoop, whoop. CPI in Africa, 6.3. That's strange. South Africa has inflation? That's odd, huh? Hey, South Africans, what is the inflation level like when the global economy is doing well? What kind of inflation levels do you commonly see? That 3% or 13%? Three percent sounds low for South Africa. We're looking at 6.3 right now. But anyways, so yeah, South African CPI is quite high. They're going to have interest rates to above that to keep it quelled. And then here's the thing with the job report out of the UK. Let's do it this way. Check that out. For the first time since 2005, UK unemployment fell below 5%. It's 4.9. Here's the chart. Okay, it doesn't include Brexit data, but I don't think people were instantly laid off or anything. But it is before. That's one thing to note. But look at that, huh? Isn't that an interesting chart? And this is back when I thought the British pound would do better in the second quarter, basically. But then Brexit just took over, and that was that. So I kind of feel like if it wasn't for Brexit, if Brexit had never even come up in conversation a year and a half ago or something, I think the UK would be raising interest rates, and they would be ahead of the Fed. And I don't know. Can't help wonder if somebody in the UK screwed up, but that's for them to decide. But that's quite a trend, huh? Look at that. In 2012, they're at 8% unemployment, and now they're down here at 5%. That's pretty remarkable. Oh, they have a full screen. Oh, nice. Interesting stuff, huh? Is that right? Well, why don't you start one, Andrew? Andrew says they need a recruiting firm to gather stats and share that as a forward-looking thing. Yeah, well, maybe that's your new thing. Okay. And also, things are pretty quiet because of tomorrow's ECB meeting, right? So put that on your radar screen. How are you going to play the euro today? So, on the calendar for the 20th of July, Baltic Dry Index, great. Chinese Conference Board leading indicators. Leading indicators, nice. So we'll see what comes of that. It'd be something to take a look at, take a gander. Eurozone consumer confidence, -8. How do you call that consumer confidence? I think they should change the label somehow, right? Hey, on a scale of 1 to 10, what's your confidence level? -8. You're like, wait, that's not even on the scale. Uh-huh. And, of course, oil inventories. So, kitty CAD, right? Kitty CAD? So we talked about that on Monday. Maybe you should have started trading CAD on Monday and then Tuesday to front run it for Wednesday. Yep. CAD is, let me get a CAD versus what? Hang on, blah, 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 blah. USD CAD is up 1/3% today. And CAD yen is flat, which means CAD and yen are weak. Also, later today, Brazilian interest rate decision. Whoop, whoop, whoop. Are you going to trade it? No. But you could read any statement or, release and just see what the Brazilian central bank, right? How what they're looking at globally. What's their macroeconomic outlook? What are their thoughts for commodities, for example? Might be, again, another thing to just download and read, simply because you want to be the type of trader that downloads and reads such data. New Zealand assessment of economy, fine. And Aussie business confidence, great. You know what I forgot to get was the dairy data. I know that came out yesterday, right? Fonterra dairy auction. Life is good, love is good. Forgot to do this. Just slipped my mind. Oh, no change? That's just great. Go through all the effort and find out that there's no change. All right, so anyways, no change. But flat's not down, is it? That's one of the things I'm watching is, you know, is it down or is it up? And not down is the new up. Right? Not down is the new up. Wow, look at that. Butter price is way down. Yeah. I don't care about lactose. I'm intolerant for that. Whole milk powder. Milk fat's flat. Cheddar, huh? What's the deal with cheddar? Should have cornered the market in cheddar in the third quarter, huh? So anyways, that does affect kiwi prices, or can. So negative is maybe positive. You're probably going to do whatever you're going to do anyways. Yeah, Nick scalped it. Yeah. Did you guys trade the double bottom in Asia? Guess we could take a look at that. Well, you know what? Let's do a commodity check here. Let me check the morning report. S&P 500 futures up 0.25%. Euro stocks up. Crude oil down. 10-year T-note 1.56. Dang, it's just amazing to me. Just amazing to me. Euro dollar just slightly down. DAX up 1.3%. Holy smokes, eh? So Germany way up. FTSE, it's up a little bit, not much. Hang Seng up a full percent. The French stock market up a full percent. Holy smokes, eh? Okay, looking around. Gold is Oscar Mike, and it's coming down fast. Copper, remember yesterday we were at the monthly R1? It collapsed again. Just hit double topped off the monthly resistance pivot, dropped like a ton of bricks, retraced back about 50. A ton of bricks, interesting if you're a copper trader. Taking a look at gold, we can do it on this chart, I suppose, eh? And that kind of looks down, doesn't it? Holy smokes, eh? Ba 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 ba. Do 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 do. Just gone, man. Just gone. Amazing, huh? Straight down. In a blaze of glory, take me out before you shoot. So, are you going to buy it? Are there any gold bulls here? Any gold bugs? Who likes to buy gold? This is our buy zone that I identified on Monday. Is that right? Yeah, I think so. Yeah, and the issue here is we've already had a pullback extension, And I would have liked to have stayed above this area here. So if you're a bear, that's good news, except that's a dumb place to sell it now. But if you're a bull, you still need to buy it if you're a bull, right? But your target would be the top of the range, or maybe the 1382 we talked about earlier. Okay. It could come down to the monthly, weekly cluster down here, which is also a 618 Fibonacci retracement. But nonetheless, you should be on red alert where, we're pretty close to a 50% retracement, right? If you're going to be interested, you better get interested soon. What do you think? Okay, one of the things we talked about yesterday with the S&P 500 is I used the 21 EMA to assume up. Thank you, 21 EMA. I appreciate it. We haven't really made a top, though, have we? So we'll see what happens. I think the general consensus is that the earnings have been okay, right? Okay, in that case, that's good for the stock market, and that's good for global macroeconomics. AKA sell the yen and buy something nice. So we have oil inventories today. It's going to come out at 10:30. What do you think? So it's really going to come down to, when supplies are going to stop coming to the market or when demand increases. And I don't think any of those things are really going to happen. Also, do you remember maybe a few months ago we were talking about how I did a little speech on entrepreneurialism, and that's one of the strengths of the American economy, and that it was entrepreneurialism that even produced these low oil prices. Unfortunately, it was also lack of regulation because it was basically wildcatter frackers kind of thing, so no one was really in charge of at the helm. So we got oversupplied, right? But nonetheless, one of the things I talked about is if fracking is $60 a barrel and oil's only paying for 40, someone's going to find a way to either improve the processes or refine the technology to be able to produce it for less so that they can make money at 40 bucks a barrel or 50 bucks a barrel, right? Right? And I think we're kind of a bit, or how about this? I bet you. Like, I don't have any numbers in front of me. I think we're getting there, and I think people are probably going to keep doing that. I think because you don't see, even at these $45 a barrel, oil keeps being produced, and I don't think they're doing it, for to be nice. They may just be doing it to produce income, though, and just to pay the bills, right? To service their debt, at least pays some of the bills or most of the bills. But they're going to keep producing oil one way or the other. So, again, is this going to $60 a barrel? One of the big banks thinks it's going to $60 a barrel, but I don't see demand side or supply side evidence that would sort of validate that point of view, right? Unless I'm missing something. Oscar wants to know about the head and shoulders on gold. I don't see it. I don't see head and shoulders here. Still don't see it. Okay, if you see a head and shoulders right in front of me, then it's not a head and shoulders. I have no idea what you're looking at. Yeah, no, and so there's a couple of things that people, when they see a head and shoulders, zoom in a little. No, I don't need to zoom in a little. A couple of things, and okay, and let me just share my experience. I'm not saying you're right or wrong, but you're wrong. One thing that I see mistakes on is that a head and shoulders is a reversal pattern. Okay. And you need a trend behind it. Okay. And sometimes people will see something like this. Right. And let's say it's kind of like this. And they're like, Wayne, a head and shoulders pattern. Right? See, left shoulder, head, right shoulder. But there's lacking trend in front of it. Well, then all you're seeing is noise. Okay, and maybe you do see a left shoulder, right shoulder, you know, and a peak and some sort of neckline, but really what you're observing is range, because you cannot have a head and shoulders without a strong trend behind it, because you're not reversing anything. You have to have a trend to reverse it. That's one thing, so I'm not saying that that's here. Some people do this too, which is, I think, is interesting. They see a downtrend, and then they call this a head and shoulders. What's wrong with that? Yeah, it's upside down. But I'll hear that, or from people where it should be inverse head and shoulders. It should be like this. Okay. And the reason it's forming is that these bears are heavily short because this move is so strong, and they're getting the whole entire market as an aggregate is getting nervous and wants to take profit. Okay, so these guys take profit, the other guys hang on, and it drops even farther, and then they start to take profit, and then it has this big pullback, which freaks anybody else out that got in, or that are still in and never took profit, or got in late and now are losing, but whatever. And it comes here, and everyone that is going to take profit takes profit. And that's why it ends up reversing, because there's no more bears left. Okay? This doesn't tell me any of that, right? So you have to read the psychology. So somewhere in here is key support, and some people took profit, most people took profit. This is your last chance to take profit, and then there's a break above the neckline. I guess if you're using the zigzag, for example, you might be calling this a head and shoulder, a neckline. Oops. Is that close? Is that your neckline? Go to 4 hour. All right, I'll go to 4 hour. Anything for Oscar? Okay. Zoom in or zoom out, or Okay, yeah, no, it's not an inverse. All right, so you're thinking they're short here. Golly, where do you see it? Dude, let's see. I mean, let's say you were looking at this, but I mean, you're so far out on that, then I don't think that's what you're looking at, though. So, too many indicators cluttering your vision. Really? Do other people see it? All right. Well, then let's do this. If that's it. All right. I mean, I think, yeah, but are you looking at like this? I can't fathom what you're looking at that would be called. So let's just say I don't see a head and shoulders. And I'm a pretty good head and shoulders guy. Hardly any. Then it's not a head and shoulders. Like Alex says, maybe it's just not a right shoulder. Well, then it's not a head and shoulders. I mean, remember, I'm not looking for patterns. I'm looking for human, I'm looking for greed and fear. Right? So if you don't see a strong trend, and this isn't a trend, that's price action. That's a response to a fundamental economic event. So like, for example, let's do it this way. Okay. A trend would be, let's say, okay, I'm not paying attention to Elliott Wave or anything, okay? It's all trending, everyone's buying dips, and then, oh, you see the problem right there? Now I'm thinking head and shoulders. Okay, I'm not looking for patterns. I see that there was a lot of people long over the course of time, and then something made the entire market bail. So that there was, for example, normally you look for a bottom and a top, and you draw your Fibonacci retracement, 382, 50%, 618, and even a 786, and you're like, what the heck are we doing down here? So this is driving the bulls out of the market. Either it started as profit taking, which almost always it does. So let's say there's a pivot in there or something. But then it follows on with bears getting in. So the next thing that typically I do is I take this area and I drag that across and say this is shoulder country in the future. And very often you see stuff like this, okay? So now you're looking at this as a right shoulder of this area, okay? So then you take the distance of the peak to the neckline and you project that down into here, okay? And you're shorting here and then on the little mini pullback to this and then down, okay? But there's a logical, intelligent reason why it's happening, okay? And so going back to like the charts and stuff, honestly, I don't see what you see. And so maybe that's my problem, but I see other things going on besides that, okay? And very often, you might call it a head and shoulders, and let's say it's just not a head and shoulders, but you would trade it exactly the same. And I don't care if it's a head and shoulders or a 1, 2, 3 and all that kind of stuff. So for example, you might see it as a head and shoulders. I would trade it like a head and shoulders, but I wouldn't call it a head and shoulders, okay? So you go like, there's your 100% retracement, into support, right? It's also the double top with a lower low, right? There's your top, there's your lower low relative to this low. So you would automatically, without even thinking about it, yell hammock, trade it off the roll reversal, and you're short. Okay? Okay? I wouldn't call that head and shoulders any day of the week. I would never call that head and shoulders, but we would trade it exactly the same. So really, we could call it a monkey brain pattern and it wouldn't matter. Right? That's a hammock. That's not a head and shoulders. So it's not a head and shoulders in my humble opinion. But whatever, as long as you're short on that, that's fine. And Nick, you can. You can, but the dude that did his millions of hours of research in Japan and then translated it all to English and brought Japanese candlestick patterns to the Western world. He says, after you buy the $1,000 book and take the $9,000 training course, he tells you this. If you're at resistance and you see a reversal pattern, it's a reversal pattern. If you see a reversal pattern and it's not at support or resistance, it's not a reversal pattern. So you're like, well, dude, you could just sell it because it's resistance, right? Regardless of the pattern. So maybe it's not the candlestick pattern at all. It's just simply you're at resistance and it has a higher propensity to fall than rise. Oh yeah. Yeah, and then that just kind of screws up the $9,000 weekend training course, right? So yeah, that sucks. So I'm not the type of person that will want to memorize, let's say, 47 and a half different patterns, right? You're like, yeah, those are the 47 and a half most common patterns, Japanese candlestick patterns you need to memorize. Well, I'm not going to memorize any of them, except head and shoulders, of course. Oh, he combines Eastern and Western. Oh my gosh, that's so funny to be so. Yeah. How funny. You should. I'll never forget the look on his face. He approached me one time, and he's like, "Hey, we can make a lot of money together," because I was a leader of a very large community of Forex traders. And he's like, and he comes right up to me, and I'm surrounded by people. And he comes right up to me. He's like, "Oh, we really need to work together. We can make a lot of money." And and I looked at him. I said, "Well, I already have a lot of money." And he was dumbfounded. I'm like, "So, I don't know. How are we going to help people?" And he was dumbfounded. Like, how is it going to help? Tell me how it's going to help people. I'll consider it. He gave me his business card and walked away. And that was that. So, how funny. So, yeah, so, do I look for, pregnant nun reversal patterns? If you have this candle followed by this candle, followed by this candle, followed by this candle, followed by this candle, that's the pregnant nun. So, in that case, you have to sell it? No. Right? Or do I look for two dogs and a chicken? No. Because I see the two dogs and a chicken, I have to buy it. No. I'm an entrepreneur. I don't follow rules. I don't break rules. I just reinvent better, right? I just make it better. So it's just how my mind works. But just if you're talking about things like, do I pay attention to a top? Yeah. And then, do I think a bearish engulfing candle off of resistance is important? Yeah. Like, why wouldn't it be? Right? You know what I mean? That's kind of how I look at it. Candles don't make me do anything. I don't say, like, let's say a classic one, right? A doji, and I say, oh, look at doji, I have to do something. No, it just tells me that nobody traded. So now you can look at it and say, well, why didn't people trade it? I think more important to that would be like, did this occur? Okay, so now let me go back into the same chart we just had. Do you think this occurred, these patterns here? Oops. Is it possible they occurred because these were weekly reversal pivot points? Okay. And the obvious answer is yes. Okay, great. Did they occur because of candlestick patterns? Or did candlestick patterns that you may or may not see appear because people acted at these levels because they were possibly pivot points? And then, of course, that begs a question, do traders even use pivot points and all that kind of stuff, or is that a random walk? Well, I'm convinced it's not a random walk. And so what are you supposed to do at the weekly R2? You're supposed to take profit. You see what I mean? I don't care what the candlestick pattern is. I know that the guys that are long here, they've been taught to take profit here. That's what the pivot points do. Just like this is, you've been taught that that's support. So that's supposed to be the bottom of the week. This is supposed to be the top of the week. So guess what? There was a high propensity for those that were long to take profit in there. Okay? Now if you want to use things like candlestick patterns to say, to confirm what you already thought maybe days ahead, that, hey, I think people are going to get out at this level. Well, if that means you should get out at that level, or if you're not in and you see weakness based on your candlestick patterns, that you can short that, knowing that these guys are probably getting out of the market because it's an R2, right? So it's more like I'm interested in the analysis ahead of time. If you're looking for candlestick patterns and you're waiting for, let's do it this way, small candle, giant bearish engulfing candle with a doji, you're waiting for it to happen, and then after it's happening, you want to do something. And I don't like that because it's already happened. So I would rather teach you and say, oh, like, you got leading indicators and you have lagging indicators. And the leading indicator says this is probably going to be the top of the market. So when you're there, you should probably take profit. If you're not in the market and you're up there, you either do nothing or you look for the opportunity to sell back into, let's say, the weekly. Okay? And you're thinking about it before you even get there. And you're thinking, should I sell? 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 And yes, you could sell this if you wanted to. Okay? Or even better, should you sell the double top? Even better, should you sell the double top with the lower low, lower high? Okay? And now we got some high probability, advanced planning that has nothing to do with Japanese candlestick patterns. You could use anything you want. You could just use lines. You don't even, right? You could use a line chart for that and just say, wow, that looks like a 50% retracement after a double top. Who cares about the candlestick pattern, right? It's a combination of leading and lagging indicators in your trade planning. Okay? Now Alex says, so he uses leading indicators. Well, you probably would. Okay? So like I said, his $1,000 seminar will tell you is if, a reversal pattern at support or resistance has a higher probability of reversing. So you kind of need to know where support and resistance is. Okay? Right? Okay. Like I was teaching you before, it really comes down to going from a trending pattern, to or market, let's say to a range-bound market, to a breakout market, and you need to have strategies for those different markets, right? And we've covered this really 100 million times, which is cool actually, because at some point it's going to stick, right? If this breaks, oh come on, drawing tool. If this breaks the range, what do I teach you to do? Sell the retracement, probably off the roll reversal, right? Okay. So now, if you're in this area here that I have circled in black, if now you want to look for a bearish engulfing candle or a doji or whatever it is that you look for, okay, that's fine. Because at this point, I don't really care what makes you pull the trigger. I really don't care. And we might have 10 people in the room and 11 different ways of pulling the trigger in there. As long as you pull the trigger, I don't really care. Was it the moving average crossover? Was it the touch of the 21? Was it the 5-8 cross? Was it, something on the smaller time frame? Was it a roll reversal and you just had a limit order? Was it the pivot point acting as resistance? Was it a Fibonacci retracement? Was it a candlestick pattern? I don't care. As long as you're selling in a reversing market, I couldn't give two hoots what actually makes you pull the trigger, as long as you're pulling the trigger, right? As long as you don't do things like, okay, double top, lower low, I should buy it now. That'll be a good opportunity to buy it after the lower low. As long as you're not doing that, I don't really care, right? Okay? So, head and shoulders, I don't know. I don't see head and shoulders, but if you're selling the rallies, then that's great. Okay? And the other side is eventually bulls are going to get back in, right? That would be the presumption. Where are they going to buy? Give me a level that a bull would just have to seriously consider buying. Where would the bulls just be desperate to get back in? Or where would the bears be sweating bullets? They're like, oh my God, I shorted this at, 1370. And now look where we are. Or 1350. Now look where we are. I just have to take profit. I need to take profit. We better take profit. If I don't take profit, I'm going to lose it all. It's going to bounce. It's going to round. The bulls are there. The bulls are there, right? Right there, 1300. If I was a bull, I would seriously need to consider that because I'm a bull. Okay? It's a psychological level, it's a fib level. The next one's down there. It's a roll reversal, all that kind of stuff. And if you're a bear and you sold it off the top and you hit 1300, after a higher high you sold it, you sold the higher high. You sold the higher high. Even higher than the big wick one. I mean, look at the pattern. Up, fib retracement, up, fib retracement, up, and you sold it. Well, it kind of feels like it's higher high, higher low, higher high, higher low, higher high. You sold it? What? You what? You sold it. The third higher high in a row since May. Yeah, you sold it. Okay, good. Well, you're making money. But I bet at some point, whoever bought it at 1200 is going to want to buy it at 1300 on a retracement, right? But they're going to want to buy a dip, right? unless negative interest rates go away. But I don't think that's going to happen. In fact, is it possible that Japan or the ECB, right, the BOJ or the ECB, is it possible that they make negative interest rates even more negative interest rate? I still don't know how to say it. How do you be more negative? And if you increase negative interest rates, does that mean make it less or does it make more? It's really confusing to me. I'm such an optimist, positive person, full of love and generosity and kindness, that I just can't think in negative terms. Making more of, there'll be more or less. There'll just be more or less, there'll be lesser. Interest rates will be negative, right? And if that's the case, then this could go up. No, it's not QE per se, but all right. So there you go, yo. So yeah, do I use candlestick patterns? Sure, but you don't need them. Okay, like this, right? Watch this. Oh my God! Now I don't know what to do. Oh my gosh, my candlesticks went away. I don't know what to do now. Life is a mystery. Everyone must trade alone. Yeah. Now it's all gobbledygoo. How can you trade without candlesticks? Yeah. So I think you get my point, right? Sure, you can trade without candlesticks, but it makes sense. Buy at support, sell at resistance. Damn, is Tiger Woods still having troubles? Gee whiz. He just withdrew from the PGA Championship? Really? Is that true? Gee whiz. I'll keep waiting for his big comeback. I mean, I want him to do it. I just saw up there. Yeah. So anyways, that's cool. Thanks for, bringing that up and adding to the conversation and stuff. It's important. So let me summarize one more time in a different market and different chart. Okay. Is it possible that that is resistance on the S&P 500? Okay. So you have two choices. If you're a bear, sell here or sell here after the break. Okay? Okay, that's it. So what do you need to pull the trigger? And that's for you to decide. But there's only two possibilities for me. Okay? And the analysis, of course, is to identify the support and resistance. I already got resistance up there. Okay, but let's do it anyways. And you either sell it at the top and manage the risk, right? Or sell it on the break and manage the risk. Now this is going to complicate matters, so it'll probably go a little higher and then fall. But that would be part of my analysis. But most importantly, I'd be there when it was happening to say, do I sell here, do I sell here, or do I sell here, right? But nonetheless, if it goes low and I'm a bear, I'm going to sell the rally, right? Or I sell the top. Everything else is just stupid if you're a bear. In what case would you sell immediately at resistance? I don't know, maybe the stock market's about to open. But if you're going to sell it, the lowest risk trade is to sell it right at the top. Okay? But let's say, okay, so this is the top. Okay? Is it possible I say to myself, as soon as we get to the double top, I'm going to sell the 5A cross? What do you think, guys? Is that a valid trade plan? You already know this gray zone above. We already identified. In fact, I think it was, but whatever. We already know that that's a sell zone. If you're a bear, you want to sell somewhere in that gray zone because it's the top to the left, which we can't see because we're only on a 15-minute chart now. So could you possibly just say, okay, if I get a 5A cross there, I'm going to sell it because I'm already a bear? You think earnings are bad, you think it's overbought, you think we're at all-time highs, people are going to take profit, whatever. So you're going to sell the 5A cross if you get one after a test of this resistance zone. I only get 2 people that say yes. Only 2 people think that you could do that and have it be a reasonable trade? All right. Okay. Yeah, you can totally do that. That means you have a trade plan. What about on a 5-minute? Can you cut the corner and get it a little closer? You say, hey man, if this turns bearish on the 5er, I'm going to take a shot. Okay. What if it does something like this in the next hour? What if it does something like that? And then, of course, okay. See, a trade plan is where you say, I see the resistance, therefore, I'm going to plan a couple of scenarios in which I think other people are going to act. And these are going to be opportunities for you, right? Do you sell the first touch? Do you sell a 5-minute double top on the 4-hour double top? That's a micro 4-hour on the macro 4-hour. Or if it double tops lower lows, do you sell the retracement? Or if you sell the top one here, do you add to it by adding a second position there? Those are all valid questions. Like I said before, I don't even care what the answers are. What I care about is you have a trade plan and you say to yourself, this could be a double top on the S&P 500. Okay? To me, that's what's important. The candlestick, don't really care. I mean, if you see a pregnant nun and that makes you want to sell it, then sell it. And the closer you can get it to the top, maybe your stop's just above. Your stop's probably always going to be in the same place. So if you sell here, or here, or here, your stop is always going to be in the same place. The only thing that changes is the number of pips that you're risking. So you might as well be up here if you can, because you're going to have the stop in the same place, risking half as many pips. Miles says, so the higher you sell, the rest you, yes, because you could do, for example, okay, you sell this 5A cross, and it does this. Well, you don't have to sit on that for 50 pips to find out you're wrong, right? Okay. Miles, it depends every time. Doesn't matter. Am I scalping, spotting, swinging? You know, depends. It could be somewhere between 25 and 200 pips, depending on what my plan is. Okay. So Baltic Dry Index came out negative. No, not a big deal. Yeah, John's, that's the session in, so yeah. Yeah, like, let's say it's the first week of the month, first day of the month. And I'm looking at it and I see weekly and monthly pivot clusters at M3 in a market that I'm generally bullish on. And then on the 15-minute chart, I get a 5A cross up off that support. I'm like, I want to be in that. And I'm prepared to risk more than 25 pips. Right? What do you want to do with gold, or not gold, sorry, euro dollar? You are the one, only you, beneath the moon and under the sun, until my torment is true. I want to spend my life trading you, Euro USD, Euro USD. Okay. Right? Any questions? Do you buy low in a falling market? So you're probably not going to buy this then, right? What if it goes up? What if it goes up 150 pips? Well, one way to say it is, what the hell's your problem? Who cares? Too frank, right? Yeah, too frank. But yeah, I mean, are you bull or a bear? That's what's more important, right? And if you're bear and it goes up 100 pips, it doesn't impact you whatsoever, unless, of course, the fundamentals have changed, which they don't change very often, by the way. So if it goes up, you clearly just say, well, if it gets up here, I'm going to want to sell it. Because if you're a bear, your job is to find the sell zone, as they say in Italy, right? Sell zone. Tone. What's the sell zone? Right? If you're a bull, I wonder why you're a bull. Because, you know, we have this idea here of the double top at the reversal pivots. It's cliche, isn't it? Do you want me to keep doing it, or do you already know what I'm going to say next? Well, let's do it. All right, so there's the support. It broke out. Then it retraced back here. Okay. You could have sold that. That would have been the easy one. Oops. Didn't break out, though. But now we have identified the bottom. We already know the top. Okay. We already know this is a reversal zone. So the other way to play it is you're just range trading. Oops. Okay, that's fine. Is it support? Yes. Do you have pivots? Yes. Right? We even have, I think there's a monthly in here as well. Right? Psych level. Right? 110. So, you know, this could go to 99, 109.80 and then come back up. And sure, you could do it that way. As long as you say to yourself, I think it's range bound, as long as it doesn't break low. How do you know it's not breaking lower? Because you know if it is more bearish than bullish, it has a high propensity of doing that. Well, what if it came in here and on your smaller time frame you got a 5/8 cross up off of support? Do you take the shot down in here on a 15-minute chart? Stokes kicker, 5/8 moving up. Okay? As long as you believe you can jam your stop at break even, then yeah. Okay? And then, if you're a bear, are you long-term long? No. If you're a bear, you're short-term long. So if you can pick up 50 to 100 pips, you should take your profit and run. If you buy it down here and find yourself up here, so you buy it at 110 and you find yourself at 111 to 111.50, you should be tickled pink to have that, 50 to 150 pips. That'd be great. But I wouldn't hang on for more if you're a bear. You see what I mean? So you're short-term long, but long-term short. All right, don't forget, trade the kitty cat today. Oil inventories are going to come out. Watch the yens. And let me give you advice on the yens. Let's just, I don't know, pick one. First, let's do that one. Okay, pick one. I'm going to pick Kiwi here. In the months of July and August, so it's the third week of July. Okay, in the next month, third week of July to third week of August, are you going to attempt to build a Japanese yen portfolio? Yes or no? Okay. Are you going to buy Japanese yen or sell Japanese yen? Okay, great. Then you simply look at your levels and decide now what levels you're interested in buying. Okay? And you're there. I mean, you're there. Like, let me zoom in here. Okay? You could have played this. Okay? You can play this. You can play this. Okay? But you need to start, guys. And you need to be there. And you need to be ready. And maybe you need alarms and stuff. You need to watch key levels like, if not 74, then 73. If not 73, then 72. If not 72, then 71. If not 71, 70. But the next 4 weeks could be the most important 4 weeks of the rest of your life. Right? Even more important than signing up for cable TV or the Dish Network with the for only $50 a month, right? Yeah, I mean, I want you to not look at the market like a video game. You see what I mean? I want you to have intent. what are you intending to do today and tomorrow and the rest of this week and next week? So I want you to really get these charts out and say, all right, I know what I'm going to do. And I'm going to prepare to do it. And I might have to do it today. I might need to wait 2 weeks. We don't know. But you need to like have a focused intent, and you know exactly what you want to do. And when the yens, let's say the yen pairs are all collapsing, red candles all over the place, you're identifying the next 3 places in which you'll consider buying, and you start looking for your magic, pregnant nun, 3 dogs and a chicken reversal pattern. Okay? It's game on, guys. Remember, when the rest of the world is crying and complaining that there's no volume and volatility, that you can't trade in the summer because the markets are dead, that's the 95% of losers talking. But the nice thing about them is you make money off of their laziness. So while they're crying and complaining and vacationing, you're setting up your yen portfolio with intent. Okay? So peace on earth, may the pips be with you, may your profits be above average. I hope to see you again tomorrow. Right on, Rob. I'm glad you appreciate them. Yeah. And thank you for asking questions. Who asked about the Head and Shoulders one today? That was great. I appreciate that. Because remember, I'm sharing my advice and knowledge with you that I've obtained over years and years and years and years and years of trading. But I'm also reteaching myself. So that's, thank you, Oscar. So that's, a big part of why I'm here, because it keeps those important lessons that I've learned over, not just days and weeks and months and years, but even decades. It keeps bringing it to the forefront so I don't forget. I mean, it's easy to forget. I mean, what did you eat for dinner 3 Tuesdays ago? Right? What did you learn 12 years ago when you were trading? Well, it's nice to bring all these things back, and why it's a Head and Shoulders, why it's not, why would that even be important, how does that particular pattern get traded, how would I trade it, what would I look for, what are the similarities, what are the differences, and then all of a sudden, we just wrote a Harvard paper on trading reversal patterns, and we found 2 or 3 different ways of doing them with 2 or 3 different ways of methodologies, and analyzed why they work and why they don't work, or maybe other ways to trade them. But at the end of the day, we walk away having sharpened our saw, if you will. So, John, your photo, your image isn't showing? Your avatar, you mean? Have you made a post lately? Because these guys have theirs showing up. Right, so you go to profile. Have you done that? Gone to your profile? Okay. And you upload it and it doesn't show it? COT and calendar not showing for you. Well, let me check calendar. It must be your browser. Looks like it pops up just fine. Oh, Miles, it took you, there's a delay in uploading? All right, well, I'm not sure what would create that, but something must have created that, right? Yeah, these are all old. There's a lot of you guys that don't have your photos uploaded. Fatal error. Is that you, John? Let me click on fatal error. DAX. No. Yeah. All right. All right, guys. I'll see you tomorrow. Take care of yourself. You hear? I do every day, Miles. I hope you give it a like. Look at that. I only got 2 likes yesterday. I feel so unappreciated. Cheers.